Okay, great. Yeah. So on the option flow channel, right? Um, Main thing, guys, for you newer people out there, option flow is what attracts smart money, institutional buys, kind of shows you how they trade, um, gives you a grasp, an idea of how certain tickers are going to move, right? Simple as that. When you see a lot of flow in a particular stock, sometimes you'll know that these bigger guys, obviously, they have some sort of insider news. Let's be honest. A lot of people trade with that. And I'm not gonna lie to you, if you guys really dive into this, you'll understand how resourceful this is. Like I've seen some trades where people put like 300K 5 minutes before that company reports earnings, and then they have blowout earnings. Like it's ridiculous. Like I'm just like looking at it. Like obviously that person that bought that stock or ticker or whatever knew something, right? A lot, and then we see a lot of Nvidia flow and whatnot. But I'm not telling you guys to follow this, hand in hand, but I'm telling you guys to use this on a contextual basis. Use this to kind of give yourself some confluence, right, as you guys trade. So if you guys can remember, I told you about the pre-market high continuation plays, the momentum trades. Those are what I like to see. If let's just say, with Apple, S&P 500, Nvidia, or Nvidia is a good example. We had a lot of Nvidia flow, Nvidia, and it broke out of that pre-market high. And we continue to see more and more Nvidia flow. So that tells me that, hey, I'm trading this to the upside. There was no need for me to exit yet. I still see a little bit more flow. Of course, the higher it gets, the more riskier it gets, right? Because now you're collecting so much profit. Is you need to tell yourself when is like the good time for you to exit. And a good way too is using this option flow. Is you see these like here, let me so you can, if you guys have this on your computer, I hope you guys do, download Discord on your computer, on your phone. Control F, Command F if you're on a MacBook. Type in Nvidia, right? Click enter. You can scroll through everything, all the prints that happen throughout the day. So I'm only doing this now so I don't have to filter through it right now. But the first print right now is 6:31 a.m. Nvidia Nvidia calls, right? A sweep, $48,000, score 19, not that aggressive, right? But of course, there was the first minute, not even the first minute of the day. This is exactly when the market opened at 9:30 a.m. Eastern Standard Time. Now, second was Nvidia put, right? Obviously, maybe it's a little hedging. Some people's maybe they might be scalping it. Maybe they're honestly, this is probably a hedge. They only put 13,000, right? It's definitely a hedge. But of course, as you're trading this, you're seeing more and more flow come in throughout the day. It obviously at this point, if I'm looking back at my charts right now, it had broken pre-market high around 30 to 45 minutes in market. So when that broke, now I can see more and more flow coming, right? That tells me that this directional trade is probably going to be the trade for the day, because you can see more flow. You can see that breakout from that pre-market high. You can continue to see these strike prices, right? Look at these strike prices, okay? I can't share both screens at the same time, but I'm looking at it right now at 8:46 a.m. Well, sorry, 11:45 a.m. on Eastern Standard Time. I'm on the West Coast. It was trading at 213. Oh, no, sorry, 200 and, oh yeah, 213. So, like you can use these as potential price targets too. 217, 210, 227 is very stretched. But you can tell that this guy bought October 29th. So end of the month. So this guy might be swing trading. There's a 227, 222, 217. So at this time when it was trading at 213 per share, these could be a good price targets for you guys to look at and say, okay, and Nvidia should probably go up another $2-3, right? And back test it. Hindsight, look at it right now. Yeah, it closed at like 218. Excuse me. But yeah, if you're looking at all this stuff too, this is a great tool for you to kind of get an idea. And if you're not a day trader or swing trader, and let's just say you're a complete investor, you want to buy equity and whatnot, you can use this exact same tool, right? You don't have to buy the exact same contract that other people are buying, but as long as you see these directional trades like a lot, or especially when you have big premiums start to punch in, right? It gives you that idea of saying, okay, hey, maybe I don't want to trade options on Nvidia. You know, I want to buy some equity, some common stock, right? Because I don't want to put too much risk, but I do want to go long Nvidia. And it looks like today might be a good time because I see a lot of buyers in it and they do expect a bullish run in the near future, right? So it's simple as that. For the equity block, same concept. You can use it, you know, control F if you're an investor, you just want to look at your favorite ticker. Let's just say I don't know, everyone loves Tesla, right? Like today, someone bought $205 million of Tesla stock, right? $250,000, 250,000 shares, right? And where did they buy it at? $819.02. Right. So it kind of gives you an insight where, hey, there are still institutions buying this stock. Okay. It's not like it's a dead stock, institutions not buying. It gives you an idea saying, okay, institutions do expect this stock to continue to run. Okay. And you could do something random too, like I don't know, like SKLZ and whatnot, right? Yeah. See, some people bought today about $10 million worth. Yesterday, a little bit. Um, yeah, I don't know if you guys have any like I don't know, Macy's or something. See Macy's. So the last time someone bought was 2 days ago, $17 million, 2251, 921, 3 million. So it gives you an idea, right? Um, of what you can see and trade. Now, unusual options, same exact concept, guys. Not gonna get, you know, to dive into it, same thing. But one thing I do want to go over too with using this, I do know some people that I don't want to call out anyone's name, but what they do is 6:30 in the 6:30 in the morning if you're on the Pacific Standard Time, 9:30 if you're on the Eastern. What they do is when they look at it and it starts to appear, what they do is they go back into their day trading charts. So here, if I'm looking at my day trading chart and they have two screens, right? And they see like the first print of, let's just say, oh, it was a Tesla. They just literally type in the ticker, press enter, pull up the option contract, whatever, at the money as fast as possible, put it in here, right? You know, this is my active trader, so I can do it very quickly. And then they watch it like a hawk. And then they wait. If there's more and more Tesla prints of calls, what they do is just enter right here. Once they enter and they're scalping it, right? They're going to be entering and they're going to be exiting. And I mean, if you want to trade like that, you can. I mean, I've seen a lot of people have success with it. They literally just watch the option flow. When they see a lot of prints come out, they check if the ticker that is a printing is above pre-market high. If it is, they're thinking, hey, this is going to be that continuation run. If not, at least they have that direction, right? They know it's going to go up. It's not going to go down. So they're going to buy that to the upside and they're going to get in and they're going to get out. And like I said, if you have a 9 to 5 and you're a scalper in the morning just to wake up, get in, get out, make $50, make $100. I don't know if you're sizing up, make like a couple $1,000, whatever. Hey, that's an honest day's work already, man. You know, you guys don't have to, you know, stress about, you know, holding it all day. You have to go into the office or whatnot. But that's just one way. Some people use the option flow channel. And again, you know, my main thing is using an option flow channel as a level of confluence. What that means is like a validation. So as long as you do your due diligence looking at a certain stock, you know, like on a long-term time frame, right? And then you see that, okay, Tesla needs to break out this level. And then, you know, you see a lot of flow come in. That kind of backs up your thesis. Once that backs up your thesis, right, you know that you have a higher probability trade right there, a very high probability trade actually, because you're trading with these hedge funds, with these big smart money. You're not just thinking, hey, it looks like it's gonna go up, so I'm gonna buy it. You actually have edge. You have edge, extra edge actually. Okay, so again, going back into the option flow, what I want to show you as well too is the way it's structured. If you can see, it's obviously the time, or I mean, sorry, first is, let's just go with the latest one. All right, PSFE, okay, 12:59 p.m. or 3:59 p.m. Eastern Standard Time. The stock ticker is right here, the time that it was purchased, the expiration contract that was purchased, the strike price that was purchased, you know, a call or put that was purchased. All right, these are very, you know, I hope they're very self-explanatory. I don't have to go over the spot, meaning the price level it was at when they bought it, The details, meaning the option contract details, they bought 1,000 contracts at $1.38. So each contract cost them $138. Now the type. So sweeps, right? Splits and block. A sweep is pretty much an urgent order, right? Where it just kind of gets you into any exchange out there that's willing to sell it to you. And then they want you to get filled. Okay. I take this sweep as a more bullish bet or more high probability bet because people who buy sweeps are compared to as like a market order. Sometimes when you guys just want to get filled, you click the market order or the buy market, sell market order. It's in comparison to that. So when you see a sweep, that means the person that bought this really wanted to get in, right? They didn't care which exchange that they can bought it at. They just want to get filled, just like with Facebook here, just like with SU here, just like with NRXP here, right? So that's a good sign when you see sweeps. On the other hand, when you see a split, it's a single exchange sweep order, meaning they just maybe wanted to buy from NYSE, right? Or whatever that exchange, they only wanted to buy from them. That's kind of like, okay, maybe they're doing some sort of negotiation behind the scenes where they want to get at a better price. And of course, the last one is block, which is very similar as well, but it's pretty much 100% guaranteed negotiated, similar to a buy limit, right? It's trading at, let's just say $1.50. You don't want to buy at $1.50. You want to buy it at $1.49, right? So you have a buy limit there, and you don't want to buy until it gets there. So it's some sort of levels of agreement. So it's not like they want to get filled immediately. They're willing to wait to get filled, which is why when you see sweeps, usually that means the order is a little bit more aggressive. Now the premium, obviously, the total amount spent on the 1,000 contracts with at $1.38, right? Very clean cut, very simple. Now the last part is the algo score, right? Higher the score, obviously, the more aggressive the trade is. So you see this Facebook 22, not that aggressive, even though the premium's a lot higher. It's not as aggressive as a lot of these other tickers. And what compiles into the actual score is pretty much, this is a few things. So I'm gonna read it out. It's the total order premium versus the days to expiration, right? So how much is spent versus when the contract actually expires. Okay, that's the first one. Combined and compiled with contracts with the current day's volume versus the open interest of this particular contract. Now, you don't have to dive too detailed into what this all means, right? But pretty much when the contracts of what that is trading for, if that whole volume is greater than the open interest, meaning what is out there that someone already holding, that also, funnels into that algo score. Third thing is the orders contract quantity versus the current day volume. Okay, so how much contracts was traded during versus the average amount of what is usually traded for this particular ticker, right? Obviously, PSFE. No one ever buys contracts in PSFE. No one even trades this ticker, right? So that kind of compiles and funnels into that score as well. And of course, the total order premium, right? The more money you spend, obviously, the more aggressive it's going to be. And the last thing that's also is the multi-exchange sweep, right? Like I just explained to you, the sweep, the split, or the block. If it's a sweep, obviously it's going to be a little bit more aggressive. And then if it's a single or a block, a split, not as aggressive. So things like that, right? It will tell you. Usually what I like to see for a rule of thumb is anything above the 45 is deemable as very aggressive. However, I don't follow if it only has one print, like PSFE, there's only one right here. And of course, again, you can control F, command F, PFSC, right? Or there's one at 1:03 p.m. Eastern Standard Time, earlier in the morning as well. But not that aggressive compared to like Nvidia, right? Nvidia had, over 20 prints today, right? And that's what I consider more aggressive. Okay, when I'm looking at this, I want to see more tickers appear rather than just one big aggressive trade. However, sometimes, when you see aggressive trades like the SPY puts, they could be hedges, right? Again, you have to put yourself in the bigger guys' shoes. They have millions, maybe billions of dollars to play with. So I know someone pointed out, hey, this guy, someone bought $4 million of puts. Honestly, they could try to trade this directionally to the downside. However, sometimes if you don't see a lot of prints of it, you just see one big one. It could be a hedge because again, hedge funds and whatnot, they have equity too, right? They want to hedge against what they're holding with commons. So it's not always they're not always trading like how we're trading, where they're just scalping, day trading, trying to find these directional trades nakedly, right? Naked calls, naked puts. It's not always like that. Um, but that's a good rule of thumb, right? Again, like I said, when you see something that's very aggressive, I don't think I've seen anything over 100 today, but those are like the ones where you should put some eyes on, right? I think we saw a couple of days ago, I think it was Neo, and then someone called it out, which put it on everyone's target, right? And then we started charting it, so we want to see some confluence, some validation there. But other than that, that's how you guys should use option flow. I know some of you guys don't have the luxury to day trade with it, live in general, but take the time after my hours, pre-market, or not pre-market, after hours, when everything's all said and done, look, control F, look for your favorite tickers, right? Or just go through each one, right? That doesn't hurt too. You see something out of the ordinary, like what Andrew's been doing on a very phenomenal basis. If you go through his stuff, he's been a good like unusual options like tracker. I remember he didn't post it, but then the first one before this was he found MTCH 3 days ago, and then after that it got included into the S&P 500. So this stuff is very valuable. I'm telling you right now, it's worth taking the time to look at. And then and again, Andrew's found many more. Okay, that's not just one sitting. So keep that in mind when you guys go through these. Take a couple days, take a couple weeks to kind of familiarize with yourself with it. It's a big tool. A lot of people use it, and as for us retail traders, anything helps. All right, guys. You guys have any questions? That's about it for today's webinar. If not, guys, I will see you guys again in a bit. Again, if you guys have any other specific questions, let's just say you're a newer trader, feel free to DM me. If it's quick and easy, I don't mind, going it over with you. If it's something more, detailed, I can add it into a webinar. I'll plan something out. I'll have some visuals for you. Try to help you guys out a little bit. But I just felt that, these three things were the top three things that a lot of questions were asked throughout this whole week, that I felt that I needed to kind of discuss. And again, I'll do a little quick recap. First thing, right? Price targets. Take the average of the daily's move of a certain ticker. Okay, you can use that as a price target correlation, right? Or of course, your support and your resistance levels on a top-down analysis chart, right? Using the daily or the weekly. Second thing is 3 important levels you need to use to trade: pre-market high, pre-market low, and the previous day's close. Even if you don't feel like you need to use it, please just have it on your charts so you have an idea of using potential price targets or even stop losses. Okay. Last thing is the option flow, right? Knowing how to read it, familiarizing yourself with it, tracking it. Look for tickers, like I said, that appear many times. Don't just look for one and then you're gonna be like, oh, I want to play this one because I saw this one first. No, try to look for like Nvidia, like today, Nvidia, many prints, good directional trade, bullish momentum. That was the trade of the day, of the week, of the month, right? If you caught Nvidia right now, it probably would have paid you a lot of money. One contract, I think, probably, I don't know, close to $800 if you wrote it from the morning till end of day, like things like that. It's absolutely crazy. But with this tool though, again, it's not an everyday thing. Even though there are ones out there, you just need to really funnel down, look through it, find the nice ones, find the good ones, and then there's a lot of honey badgers out there, that'll give you those home run trades. Anyways, guys, yep, like I said, thanks again for joining. I do appreciate when you guys actually join here live. It makes things a little bit more exciting for me. rather than just talking to myself and recording, which really sucks. Anyways, if that, have a good day tomorrow trading. Yeah, don't trade 0 days till expiration, man. That shit's fucking degenerate stuff. But if not, I'll see you guys in the trading floor tomorrow. Take care. Bye.